to us today. So without wasting too much time, I'll just introduce the first speaker for today's session. Her name is Oby Ezenduka. So Oby started her legal career as an intellectual property and business law associate. Since then, she has worked as an in-house counsel for technology agencies and has worked closely with several media companies, startups, and entrepreneurs on matters related to technology contracts, intellectual property protection, and business law. Oby holds an LLM from the University of New Hampshire School of Law. From the Nigerian Law School, she also holds a BL degree, and she holds an LLB degree from the University of Lagos. She also holds an intellectual property scholar certificate from the Franklin Pierce Law Center at the University of New Hampshire School of Law. Oby is licensed to practice law in Nigeria and the New York State. Oby is a serial entrepreneur with a techie and retired fashion model. From co-founding a gifting company and a software development agency to walking the runway for renowned African designers, Oby has lived in the world of her clients and walked in their shoes. Oby now leads the intellectual property and media practice at TLP Advisory and spends a lot of her time educating her clients, which is rooted in the belief that an informed client is better prepared to make good decisions and thereby succeed. Although not much of a foodie herself, Oby loves to cook, feed, and entertain her family and friends. She also enjoys reading and traveling. So ladies and gentlemen, please make welcome Oby. Oby, you have the stage.
Thank you so much, Titi, for that lovely introduction. Hello, everyone. It's lovely to be here, and we'll just jump right into it. So one of the questions I get asked by a lot of startup clients looking to incorporate in the United States is what type of business structure they should adopt for their startup. I also get a lot of questions and concerns about banking and the ability to open a bank account, especially as a lot of our clients are non-resident and non-citizen founders. So it's a great thing that we're dealing with these questions today, and hopefully Sydney and I can do some justice to the topic and cover your questions and concerns. I'll try to keep my session short, sweet, and simple, and I hope everyone gets to learn a thing or two at the end of it. So okay, great. I was about to ask with that. All right, keep going. Next. All right, so I've broken down my part of this session into 3 parts. We're going to talk about US legal entities, what sort of entities we have in the United States, and then we'll talk about LLC or corporation and discuss what might be better for you. We'll also talk about Delaware and other states, and everyone talks about Delaware, and we'll see what makes Delaware so special. So first off, what sort of legal entities do we have in the United States? Next slide, please. First off is sole proprietorship. We'll also talk about partnerships. We'll talk about limited liability companies, and we'll talk about corporations as well. What is sole proprietorship? It's the easiest, cheapest, most popular form of business. You want to move to the next slide, please. By its very definition, it usually has one owner who controls the affairs of the business. So basically, if one person were to start a business today, whether it was to perform a service, sell some goods, whether you registered your business or not, you automatically are a sole proprietor. The business pays no taxes. It's the owner who pays the taxes from the income they derive from the business. It's subject to very minimal regulation, and it's not, the government doesn't really concern themselves too much about how you operate your business, as long as you have your licenses if you need one to operate the type of business that you operate, and you pay your taxes, your personal income tax from income that is derived, then everything is fine. The downside to the sole proprietor is that the owner enjoys has unlimited liability, and so will be personally responsible for the debts and obligations of the company. It's also very difficult to raise capital with this sort of business. So if you're a startup who was hoping to get capital, it's almost impossible that any investor would want to do business with you. Next up is partnerships. And generally speaking, when we talk about partnerships in the strict sense of the word, most times we're thinking about general partnerships. If you were also not incorporated, you didn't register anything, and you just started a business with someone else, just like a sole proprietor who just went and started a business on their own. If two or more people started a business together, automatically you formed a partnership. And then we also have limited partnerships and limited liability partnerships. These two forms of partnerships are usually registered entities. The difference is that with limited partnerships, you must have at least one general partner and at least one limited partner, whereas in limited liability partnerships, no general partners are required. Now, what do we mean by these general partners, limited partners? A general partner is a member of the partnership who has unlimited personal liability and is involved in the management of the business. On the other hand, a limited partner is one whose liability is limited to their investment. And in the case of limited partners, you're not actively involved in the business. In most cases, limited liability partnerships are suited to professionals, so like a law firm or accounting firm, and and sometimes maybe medical practice would have to register as a limited liability partnerships. And in some states, that may be the only type of entity that would be open to you to actually operate your business. Next up, again, getting into the more popular ones, the limited liability company. This is such a popular choice. The average business in America who is trying to incorporate would most times operate as a limited liability company. They are easy to set up, and it's considered a hybrid entity in that by its very name, it enjoys limited liability just like a corporation, but it's also easy in that it's not as strict as corporations. So it enjoys like the ease of sole proprietorships and partnerships, and also enjoys the limited liability that corporations enjoy. It's also considered a pass-through taxation entity in that the taxes that you owe as not from the company itself. The company does not pay income tax. It's the members of the limited liability company who pay taxes on distributions or profits. Next up, we'll talk about corporations. Now we've gotten into like the elite and the most strict of them all. Corporations are popular because they're investor friendly, and they're popular among startups because every startup is looking to get investment, get some funding. So, and investors love corporations. So it's very popular among lots of startups. As a matter of fact, the majority of the time when a startup comes to us, they are looking to actually incorporate as a corporation. Corporations are seen to have double taxation in that the corporation pays tax, and then the shareholders who have stock in the corporation also pay taxes on the dividends that come to them. For corporations, we have various types. We have the C Corp, we have the S Corp, and we have a nonprofit. A C Corp is your standard corporation. If you said you were registering a corporation today and you were going to make profit, you're trying to get a C Corp. And people, I do not like to make this distinction so much because the C Corp is really the standard corporation. The S Corp, this is another question we get asked a lot, who is the C Corp, S Corp? The S Corp itself is not actually an entity. It's actually a tax designation with the IRS. The IRS is the Internal Revenue Service, who's in charge of taxation in the United States. So if you went and you were trying to get a corporation today, automatically you're getting a C Corp. If you want to have an S Corp, you need to make an application to get S Corp status. S Corp is not really so popular amongst startups because of some restrictions that it has. First of all, it has a limited number of people who can be shareholders in the corporation. They also have to be United States citizens or residents. This is not usually feasible for lots of startups in today's global world where you have people pulling from different parts of the world. So it doesn't really work. And the way it's taxed, investors don't really like it as well. So they will lean more into you staying as a C Corp. We also have a nonprofit. So if you are starting a venture where the idea of the company is not to make profit for the owners of the company, even though you make profit, but it's for the better good of other people, not for the owners, then you could have a nonprofit. If you have a nonprofit, you'll be registered as a non-stock corporation and you will have no shareholders. So the next part of it, that's it on what type of business entities in a nutshell. The next part is LLC versus corporation. Which should you have? Excuse me. Every business is different, and the way you choose to structure your business should be developed with your specific business activities in mind. So what exactly, what is your purpose? How do you want to have your business organized? And that would determine what sort of organizational structure you have. So we'll shed light on a few differences and similarities between the LLC and corporation. One similarity is that they both enjoy limited liability. That's what I talked about earlier when I said the LLC is a hybrid entity in that it enjoys limited liability just like a corporation. But there are some differences. In an LLC, you have members. In a corporation, you have shareholders. Um, in an LLC, you have percentage interest of your membership interest. In a corporation, you have stock or shares. LLC, your governing documents will be something called an operating agreement in some states. In a corporation, in some states, you're called bylaws. The LLC is a pass-through entity in that I mentioned that earlier. You don't pay, the company itself doesn't pay taxes, whereas in a corporation, it's a tax-paying entity. The corporation pays taxes, and the shareholders will also have to pay taxes on your dividend. The LLC is managed by the members themselves if it's a member-managed LLC, or they could designate a manager if it's a manager-managed LLC. In a corporation is governed by its officers and directors. The LLC is more I'm sorry, that's a mistake. It should be the other way. The corporation is investor friendly, and the LLC does not work for investors. In an LLC, when you exit, you would be subject to taxes, whereas in a corporation, your exit may be tax-free. Now, I mentioned that LLCs, corporations are more investor friendly. And the question is why? Why do investors love corporations? And they just don't only love corporations, they want you to remain as the standard C corps. And the question is why? It boils down to how they are taxed, right? Unlike an LLC, if you're a shareholder in a C corp, you only pay taxes on company profit if a dividend is derived. In an LLC, you would pay shares on you pay taxes on your percentage interest, whether you got that money or not. So say for instance, the profit in an LLC in a given year is $10,000, right? And see there was no distribution among the LLC members and say Mr. X owns 30% membership interest in that LLC. As long as it's declared as profit, he would be on the hook to pay taxes for $3,000, whether he received that $3,000 or not. The point is that $10,000 remain in that LLC's account as profit, and Mr. X owns a 30% membership interest. So Mr. X is on the hook for taxes on 30% of $3,000, which is $3,000. In a corporation, if you don't get dividend, you don't owe that money. So you can think about how investors would not want to be in that sort of situation where they're paying taxes for money that has not entered their bank accounts, right? So that's one of the major reasons why investors love it. Another would be your exit strategy. It's just easier to sell your stock, usually there won't be restrictions on selling that stock in most cases. That's what investors want to negotiate. As opposed to an LLC, they usually want it to be tightly held. And so it's just too many restrictions on how you can pass membership interest and all of that. And also with some recent tax laws, when you sell your stock, if you have a good CPA, you could get away with minimizing your taxes when you exit a corporation, depending on how much shares, how long you held your shares, and how much the value of it. You could be able to get away with minimal or no taxes. Whereas with LLC, there's no such concession. Once you sell, whatever money you derive from it would be subject to taxes. Now, on to the next session, why Delaware? Okay, let's talk about this as well before I move on to why Delaware. I forgot about this slide. So it's just, factors to consider about whether you want to have an LLC or a corporation, you just ask yourself those questions. What's the purpose of your business? What is your risk tolerance? What sort of investment activities will your business participate in? If you were going to go out and get investment funds, best believe you want to have a corporation, not an LLC. What management style do you prefer? Do you want it to be easygoing, just have the members manage your business, or do you want to appoint board of directors and have officers who manage this business? What are your goals for the future of your business? Are you looking to be the next unicorn and exit at some point and move on to the next big thing? Same thing. What's your exit strategy? What's your continuity plan? With a shareholding structure, the company just continues going on and on. It could outlive you even with an LLC. That may not always be the case depending on how structured you are. So moving on, why Delaware? So now you've figured out, you've thought about what structure you want. You've thought about whether you want an LLC or whether you want a corporation. And then the question is, where should you incorporate your business? In the United States, forming a business is very state specific, so you have to decide, what state do I want to form this business? If you live in the United States, most times you're thinking about forming your business in your home state, in the states where you live. But you may want to consider other states, because different states have different laws and different states have their own way that they treat businesses and tax them. Delaware is popular because of tax benefits that it enjoys, but there have been questions about whether it really enjoys such great tax benefits. And I think for me, it depends on your situation. Where do you live? What's your home state? Do you live in the United States? If you lived outside of Delaware, for instance, your home state may tax you, even though you enjoy tax benefits from Delaware. So whatever tax you were escaping by not incorporating in your home state, you end up paying it just because your operations are in that state. The reason why people say Delaware is such a great state for tax benefits is that it doesn't impose income states on corporations registered in the state, as long as you don't do business in that state. So even if you're incorporated in Delaware, you form your LLC in Delaware, and your operations are not in Delaware, Delaware will not impose income tax on your company. You don't have to pay the annual franchise tax, and people who are clients know this is one of the services that we have clients come to us for. You don't have to pay your annual franchise tax, which in most times would be a flat fee until you scale, and then it starts to get to a higher amount. Also, shareholders who don't reside in Delaware do not have to pay tax on shares to Delaware. So that's another great thing. So if you were, when we talk about the double taxation thing, so both the corporation and the shareholders themselves, as long as they were not residents in Delaware, they would not have to pay taxes. For these reasons, Delaware, is considered a tax haven, but like I said, the jury is still out on whether it's really a tax haven or not. Another thing is it has an advanced statute. It's one of the people joke about the fact that even though the US has so many state laws and every state law would have little differences here and there, but Delaware is seen as the gold of all these laws, and their statute is pretty advanced. They're really always coming up with something that is great, that makes it easy for lawyers to work with them. They also have a sophisticated court for corporate disputes, the Court of Chancery. It's really great. They really understand what corporation law is about. So it's they're dealing with the court. Feedback from, okay, is it on? Like I mentioned earlier, the law is popular amongst US lawyers. So even though we have lots of states with different lawyers who study different state law, because Delaware is quite popular, you have lawyers, even though they're not licensed to practice in Delaware, who understand Delaware law. It also affords you some privacy. So at the point of incorporating your company, you usually don't need to declare who all the officers, directors, shareholders, and what have you. Some states require you to declare that. It's only at the time where you start to make your annual report where you have to now start listing the officers and directors. And even then, the information is not publicly available unless you specifically applied for it. It also has a slim, simple structure in that one person could be the officer, the director, and shareholder, and everything. So, it's pretty easy to just say, I have this idea, I have this startup, while you're trying to get co-founders or whatever, you can just go incorporate and be everything. I've mentioned this before, investors love Delaware. It's just what investors love. So if you were looking to get VC funding, then you definitely want to really consider Delaware. There are some other states that are also friendly, they're friendly, but they're not just as popular as Delaware. Wyoming is one of them. Wyoming doesn't tax you as well, and then they also don't, the annual franchise tax which you pay in Delaware is not applicable in Wyoming, so it's becoming increasingly popular, but Delaware still remains the gold as far as investors are concerned. So yes, that's it in a nutshell. I'm going to hand over to Sydney, and I think questions will be allowed at the entity, right? After Sydney's session, we should be able to.
Yes, that's correct.
If anyone has any questions. Thank you.
Thank you, Oby. Sydney will be speaking now. Yeah, all right.
Awesome. Thank you so much, Oby. That was a fantastic, informative session here. Let me go ahead.
Sydney, I'm so sorry to break in here. I should have done an introduction before you started. Apologies for that. Okay. So Sydney is our second speaker at this session. Sydney Bagrou is a VP on the tech banking team at Grasshopper Bank, where he works with startups and their founders, VCs, universities, lawyers, and incubators or accelerators to add value beyond banking at Grasshopper. Prior to joining Grasshopper Bank, Sydney held roles at both Silicon Valley Bank and Goldman Sachs. Sydney holds a Bachelor of Science in Economics from the University of Utah and an MBA from the New York University Stern School of Business. In his spare time, Sydney enjoys listening to music, playing sports, traveling, and serving on the board of Creole College Prep, where he sits on the finance committee. So, ladies and gentlemen, welcome Sydney to the stage, so officially. Thank you. Sydney, you're on mute. I think you're muted. You're still muted. Okay, this is better.
Can you hear me now?
Yes, we can. I can hear you.
And can everyone see my screen here?
Yes, I can. I believe everyone should be able to.
All right, perfect. And again, just at a high level, my name is Sydney Bagrou. I've been working pretty closely with TLP Advisory here the last several months to really assist a lot of startups based in Nigeria, Ghana, and other ecosystem hubs on the continent with opening up a US bank account. And so I think this session should be relatively informative, and it should also be in lieu with what Oby covered from a documentation perspective, legal entities, etc. here. So just to give you an overall agenda for what I'll be covering today. First, I'll start off with a very high-level overview of Grasshopper Bank. I'll also then transition to providing really an overview of the innovation banking system here in the United States. In that session here, I'm hopefully provide some colors to the audience here in regards to some of the legacy players in the space, in addition to some of our competitors and fintechs. Then I'll be looking to transition to really getting into the nitty gritty here. So for providing some additional details on what's required to open a bank account here in the US. in addition to providing a high-level overview of Grasshopper Bank services for investors. So we also provide a slew of products and services specifically for investors. So these are angels, syndicates, and also VCs. To really start here and provide everyone with some background on Grasshopper Bank. Grasshopper Bank, we were formed in 2019. And we were really one of the first banks here in the United States that received a banking charter license post the financial crisis. We're headquartered here in New York City, but I think what really makes us a differentiator here in the market is we don't have any brick and mortar locations. So we don't have any physical branches here in the United States. Everything we do here is digital. So we're a digital first bank. And really I'll call it our market and our focus area is we're a bank for the innovation economy, right? And so really what this means is we provide banking services for founders and their companies. So, which I'm assuming is the majority of the population here that's attending today's calls. We also provide banking services for investors. So we have a slew of products and services that are for investors as well, which means that we also bank a lot of the actual venture capital funds here in the United States. In addition to really how our bank was set up is we're a very digital only, fintech forward, agile banking institution. And really what that means is that how we've built out our bank is that for a lot of the specific products and services that we have to offer our underlying clients, we've partnered with fintech institutions, right? So for example, for any of the kind of KYC AML, which those are abbreviations for Know Your Client and anti-money laundering, which is very important. And it's actually a banking aspect that's required for all new clients that are looking to enter the US banking system. We've partnered with a fintech that provides all of the banking services there. For anything that's our online banking, which is very sleek and it's very modern, we've also partnered with another fintech institution as well there. And so we're very agile, we're forward thinking, and we've really partnered with fintechs to accelerate our services and accelerate our brand awareness here in the market. Here at the bank, we have several different business lines. So myself, I am on the tech banking team. And really my team, as I mentioned, we really focus on banking both companies and their investors. Outside of my team, we have a variety of different business units and different lines. We have what's called banking as a service. And really what banking as a service is for any neobanks or for any fintechs that need a banking partner to essentially run their transactions. We're actually the underlying banking partner that can process the ACHs, that can process the wires, etc. We also have a commercial real estate division, small business administration, and even yacht lending as well, which, prior to joining Grasshopper, I didn't really know that existed. But point being, we're a full service banks and, we're well diversified, and we have a variety of different business lines and different business units. And really how I describe us is we're a bank that's really built for the innovation economy here. Which actually leads me to my next point here of providing kind of an overview of the overall innovation economy and banking system here in the United States. Because here in the US, you kind of have your traditional, I'll call it, legacy banks, right? Banks that I'm sure everyone on this call has heard of, your JP Morgans of the world, your Bank of America, your Wells Fargos. These are all very large financial institutions with billions of dollars on there, billions of dollars of assets owned under management. But what we found in the banking space is that these legacy institutions, number one, they're not really digital centric. And they also don't necessarily know how to bank startups, right? Because the reality is that startups have a very unique set of challenges and experiences that a lot of these legacy banking institutions may not have the expertise or may not have the teams to handle. Meaning, these legacy banks, they don't know how to necessarily bank companies that are, pre-seed, seed, Series A, companies that are relatively early and not well established. These banking institutions, typically a lot of the legacy ones, they're used to, your larger commercial banking kind of regular companies here that are span other sectors. In addition here, so that's kind of the legacy set. Outside of that, you kind of have your players here that are similar to what we do here at Grasshopper Bank. So I'm sure other institutions that you've also heard of, these are your First Republic banks. These are your Silicon Valley banks. And so these are banking institutions that have probably been around for the last 30 to 40 years. They do have knowledge of how to bank and how to service startups. But what we found as well in this space is that because they've been around so long and because they have such large market share, these banks typically lack the service and the expert. They really lack the service in order to, really provide boutique and niche banking services and solutions to a lot of the early stage companies. So they typically have thousands upon thousands of companies within their portfolios. And because of that, sometimes the teams have capacity issues to really focus and provide, personalized relationship driven banking services as well. So those are some of the competitors. I think what's also important to really note out here in regards to the US banking landscape is the rise of fintechs, which I think is very important because, a topic of discussion that I think is really top of mind for a lot of, African-based startups is, there was this institution, this fintech called Mercury, right? And there's the Mercuries of the world, the Brex of the world, et cetera. But I think what's important to call out here is both Brex and Mercury, they do not have actual banking licenses, right? Typically what they do is they will partner with another OCC regulated and OCC chartered institution such as Grasshopper to provide the underlying deposits. So this is really where a lot of their underlying accounts sit, the cash sits, et cetera, ACH, wires, et cetera, right? And so as well in the space here within the innovation economy, the rise of fintechs has been relatively strong, and fintechs have been competitive because they've been able to provide these banking solutions to a lot of startups. But the risk that a lot of startups have when banking with these fintechs is, I'm sure like a lot of individuals on this call have probably heard of Mercury Bank, for example. Mercury kicked out or had issues with a slew of African-based startups, and that's really because Mercury was at the mercy of another banking institution, right? Which is Evolve Bank. And at the end of the day, Evolve Bank, for the most part, they're conducting the KYC, they're conducting the AML, and they're really the decision makers as it pertains to whether or not these startups should be banking with Mercury in the first place. So I think that's just very important for this audience to know, is just the banking landscape in general, the players that are in that landscape, and then as well some of the risks that are associated with potentially banking with the fintech as well, which I think is extremely important. So now I will transition to probably a pertinent topic and question that everyone has here, right? You're potentially looking to expand in the US market. You filed your certificate of incorporation. You worked with TLP Advisory. Now the next step is you actually need to open a US bank account, right? Now, Grasshopper, we do have the ability to open US bank accounts for foreign individuals, but there's a couple considerations that I think are very important that the audience needs to be aware of, right? And so I'll first start with what's needed from a documentation perspective. First, you're going to need your file and staff certificate of incorporation / EIN number. This is something that TLP Advisory can assist you with. This is kind of what they specialize in as well here in regards to helping companies come to the US, either set up in Delaware, either for the C Corp, S Corp, etc. That certificate of incorporation is required prior to moving forward with opening a bank account. And this is documentation that Grasshopper will ask for upon the onset of opening the bank account as well. Second, we're going to need the full physical address of kind of the business that's being incorporated here, right? Including city, state, and zip. So typically, when you file that C Corp in Delaware, there's going to be an associated address that is established. That's also something else that we will need here at Grasshopper in order to proceed with opening the bank account. What I don't have listed here, which I think is very important and which I think will help to expedite the account opening process for the US bank account, is it's very important to have some sort of exposure to any sort of US operations here, right? I think that's very important when establishing a US bank account. So whether it's you have, you've hired some tax individuals here in the US to conduct business for you. Maybe you're conducting payroll here. You have engineers, you have some office space, etc. I think that's also very important to have when you're considering expanding here in the US and you're considering doing business here, because what's going to occur here is here in the United States, as I mentioned earlier, as a banking institution, because we're federally chartered, we have to conduct both know your customer and anti-money laundering prior to the account opening process, right? And so if individuals do not have, again, any sort of US operations present, they may face some stringent and higher, I'll call it regulatory oversight as it pertains to opening up a bank account. So I think that's also another very important point for individuals to make prior to proceeding with banking here. In addition, from a documentation perspective to opening the bank account, we will be providing each individual the account opening application documentation. We typically have an individual here from our client service team send everything out digitally via DocuSign. And individuals are just kind of complete that application. Again, it's going to ask for the certificate of incorporation. It's going to ask for the address, et cetera, et cetera. That's also going to be included as part of the account opening process. And I think here, probably one of the most important documents here that's relatively pertinent to this population is what's called the W-8 BEN form. Now, what this form is it's the Certificate of Foreign Status of Beneficial Ownership for United States, tax withholding and reporting purposes for individuals. So basically, this is needed if you're a non-US citizen, you're a non-US resident, but you have a US business that is registered. So again, you have the C Corp, you have your certificate of incorporation, you will need this W-8 form filled out. I've helped several of TLP advisory clients fill this out. And I think at this point, TLP, and again, they can correct me if I'm wrong towards the end, but they do have the expertise and they can kind of walk everyone through kind of what's required within that document and what needs to be populated in there as well. But again, these are the documents that are required prior to moving forward to opening the account. And what I'll typically do is I'll provide, again, like a broad overview for all of our clients in terms of what is needed, in addition to this W-8 BEN form as well that is required to move forward with opening a bank account. And so, outside of that here, because we are an OCC regulated bank here, we face a lot of regulatory scrutiny, right? So we have restrictions, and then we have accounts that are actually completely prohibited. And these are companies that, if they're in any of these related, and I'll go through some of the account types, we're unable to open any sort of, we're unable to open a US bank account for these businesses. And so from a prohibited account type perspective, this is any businesses that are involved in the cannabis or marijuana related industries or any related businesses, anything that's related into Bitcoin and any type of cryptocurrency, any sort of shell banks, in addition to internet gambling. Again, these are prohibited account types. We cannot open a bank account for any businesses that are associated or do business with any of the account types that I just referenced here. And again, this is because we are OCC chartered and we are regulated. And so just in regards to United States law at this time, for a banking institution of our size, we're unable to open bank accounts for companies that are in any of those, related industries. Outside of that, there's also what I'll call restricted account types here. Now, companies that conduct business in any of these industries, it's, to be relatively frank, it's going to be relatively difficult to open an account if you're within any of these industries. What will occur is here at Grasshopper, we will need exception related executive approval in order to open these account types. So what will happen is I'll typically meet with the business, I'll find out a little bit more about them. And if the businesses are in any of these related industries that I'll quickly go over here, it's going to require approval from the C-suite level here at the bank in order to proceed with opening the bank account. And again, just given kind of the regulatory scope, and because we are a new institution, you know, in my eyes, it's going to be relatively difficult to receive approval to proceed with opening any of the bank accounts within these associated industries. And so, to provide some additional color with what this is, these are any companies that are in the business of, you know, third-party payment processing companies. So again, a business that provides payment facilitation, processing to merchants and other business entities directly, any money service businesses. So again, these are businesses that provide money transfer services in any amount or engages in, you know, cashing checks, selling money orders, selling travelers checks, currency dealing or exchange, etc. Any pawn brokers or pawn shops, casinos and card clubs, in addition to hard money lenders. And again, I want to provide this information to this population here because I think it's, you know, very important prior to, you know, attempting to open an account with Grasshopper, just to know some of the additional, number one, just to know what sort of businesses we cannot bank here at Grasshopper, in addition to the sort of businesses that will really require and will really face higher levels of scrutiny, and that will also require us here at Grasshopper to receive C-suite level approval in order to proceed with opening the bank account. So that's really it from a company perspective as it pertains to the type of accounts that we can open. Here at Grasshopper, as I mentioned earlier, we also provide banking services for investors, right? We bank, you know, several, I'd call it anywhere from over 100 really venture capital funds here in the United States. And so we have a slew of products and services that, that these venture capital funds can take advantage of. So I'll kind of now just provide a very high level in regards to our fund banking services that we offer here at the bank. Really here, as I have here on the page here, you know, we have products and services that really support the full scope of what it takes to manage a venture capital firm. And so within a venture capital firm, there's, you know, different LLC structures, and there's different LLC entities. And our products and services, we really have individualized products and services per entity. And I'll quickly go over them. So the first product and service that we have, and the first entity that I'll cover here, is what's called the general partner entity. Now, what this entity is, it's, you know, the fund manager. It's really the fund manager of the entity, and it's comprised of the individual partners that are responsible for the fundraising, investment decisions, and ongoing fund oversight and investment management. So if you think here of any, you know, prominent VC firm here, like for example, Andreessen Horowitz, they have their quote unquote partners, they have their investors. These individuals would be considered general partners for the overall fund here. Now, from like a knowledge sharing perspective, typically what the limited partners of a fund and what the limited partners are is these are just typically the investors, right? They're the investors that are writing the checks for the venture capital fund. They typically require that each general partner personally commit anywhere from 1% to 3% of an overall fund's commitment, right? So to put it simply, if you have, for example, a $100 million fund, what the LPs will typically require is the general partners need to commit their own capital within that fund as well, right? And so that's going to be a low percentage of the overall 100 million here. Now, if we think about it here from a structural perspective, and this is actually something that, Grasshopper is attempting to solve here within the overall innovation economy and venture capital landscape, that general partner commitment, it really provides and really presents kind of structural hurdles for many, what I'll call it first-time emerging managers. What we really define as first-time emerging managers are managers that haven't launched a fund before, and they're potentially on their
yes,
first
I am.
fund. And here in the United States, this is typically, you're typically going to find this in many underrepresented minority communities. So, Black, Latinx, female emerging managers, etc. And so the reason why I'm calling this out as a structural issue is that many of these communities here in the US, they don't have for example, $1 million set aside here in order to commit to the overall GP commitment. And so a solution that we've presented here at Grasshopper here is what's called a general partner term loan. That's a specific product that we offer. Now, what this general partner term loan is that we have the ability to fund up to 70% of the committed capital of the general partner's committed capital, right? So again, let's say the committed capital is, of the 1% of the overall commitment, let's say it's $1 million, Grasshopper can help and can assist with a term loan up to 70% of that. So in that $1 million example, Grasshopper can assist with funding $700,000 of the overall general partner commitment. And again, this really is to assist, and this is really to help with some of the, structural, what I'll call it, kind of structural inequalities that are present currently within venture capital, specifically as it pertains to, Black, Latinx, and female emerging managers. So that's what we can do from a general partner perspective. I'll then now transition to a different entity, and this is the actual fund. And so within the construction of a venture capital fund, again, we have the general partner entity, which I just covered, and then as well, we actually have the fund. Now, the fund, it's relatively simple. This is just really the vehicle that is used to secure capital commitments from investors and to make investments. And so to put it simply, the fund is actually where the underlying, outgoing wires will go to the portfolio companies that the investors are looking to invest in. And so typically what occurs here is that the general partners will secure what are called capital commitments from investors. And what this is that an investor will agree to, for example, to put it simply, they'll agree to commit $1 million to the fund, right? But what this is that it's just simply a commitment, right? These LPs and / investors, they technically have not wired the $1 million to the actual fund to allow them to deploy capital, right? So what occurs here is that every time, typically within a fund, every time the general partners are looking to make an investment, they will have to do what's called in the industry, call capital from their investors, which typically they send a notification to their investors. Hey, we're looking to make X investment. You've committed, $1 million of capital here. We need you to wire over 250,000, just using this as an example here. So then what occurs is that, again, these LPs, they've committed to, the $1 million, they'll commit to, again, wiring the $250,000. So they'll wire that over, but typically within the industry, the general partners give these LPs anywhere from, up to actually 2 weeks in order to wire the funds over. Now, this actually presents some challenges for a lot of funds, because let's say, for example, there's, a hot deal that these funds are looking to invest in. They're essentially at the liberty of the LPs to wire over the funds within that 15-day time period in order to deploy capital. Well, in this game of venture capital, sometimes these funds, they need to essentially move very quickly, and they need to be agile. And so it's typically a timing issue from making the actual investment and actually receiving funds from the limited partners. And so here at Grasshopper, we have what's called a capital call line of credit, which essentially just provides financing to the general partners of the firm to really assist with the timing of making the investments, right? So in the example that I pointed out earlier, the limited partner needs to wire over the funds to the general part, to the underlying fund in order for the fund to go ahead and make that investment. But we actually provide a product here. You can think of it as a cash management product where the fund can tap into basically a line of credit in order to deploy capital relatively quickly to make the underlying investment as quickly as possible. Then once they actually, quote unquote, call capital from their investors, they can just go ahead and pay back that line of credit. So that's why, this is a really effective product that we have that a lot of funds like to take advantage of. And again, I'd really say it's a cash management tool that really helps with the timing of actually receiving the funds in addition to the funds actually deploying capital and making their investments. So that's what we have at Grasshopper for the underlying fund. And then from a management company perspective here, we also have an additional product. Now, to provide individuals with some background on the kind of management company entity, typically the management company entity is, it's owned by the founding partners of the firm. It's really just the operating entity that's responsible for paying the expenses of the firm. So they use this to pay for payroll, they pay for leases, travel, and overall general admin expenses. Now, so typically how this works is the fund typically pays management fees of up to 2% based on investor commitments to the actual management company entity. Now, typically the management company entity is structured as an LLC, and the net income at the end of each year is usually distributed to the partners and other key employees. But what we find here typically within a venture capital fund is, again, kind of the timing between actually receiving the underlying 2% fee of managing the fund and actually having to pay for payroll, having to pay for leases, having to pay for travel, and any other general admin expenses. So the solution that we have here at Grasshopper is we have what's called a management company working capital call line of credit. And so this can really just assist with the financing, right? So it's just really there to bridge the gap between the receipt of fees from the underlying fund and as well the day-to-day, monthly, quarterly, etc. expenses that the management company has for payroll, for leases, for travel, and for any other general admin expenses as well. And so this is, again, this was an overview of kind of the fund banking services that Grasshopper has as it pertains to supporting the various entities of what it takes to actually run a venture capital fund. And we can go ahead and transition to any questions that anyone has.
Okay, thank you very much, Sydney. I absolutely enjoyed the session. You guys would agree with me that the session has been insightful so far. I definitely have some questions, but we can just take some of the questions in the chat box. The first question is from Jubril. And he's asking, does TLP have AML privacy and other policies that are compliant with US regulations for founders? Oby, could you kindly assist with this question?
Oh, yes, definitely. We do. We are in a position to help with compliance and draft whatever policies that your startup may require.
All right, thank you, Jubril. I hope you're still on the call to get that response. So we definitely provide those services as Oby just explained or just mentioned. The second question here is for Sydney. The question is from Damilola. He's asking, are there restrictions in the kind of company or product that Grasshopper can provide business as a service support to? That's the first question. Then the second question is, will the bank be able to support a crypto exchange, for instance? I think that it's still one question, just broken down into two parts.
Yeah, great question here. So in regards to the current restrictions for our banking as a service offering here at Grasshopper, I didn't really go too in depth with that for a couple reasons. Number one, we just received kind of the regulatory licensing and regulatory approval to offer banking as a service to companies. Now, because this is brand new and because we just received really some of the initial regulatory approval, this is currently just reserved for US-based companies and US-based clients. So unfortunately, for any companies that are operating on the continent, we cannot provide any sort of banking as a service solutions for these companies. And again, that's just really a regulatory thing. And it's because it's a brand new business line that we just got into. as the bank grows and as we really expand the banking as a service offering, I can see this changing. And I can potentially see us shifting in regards to the sort of companies and the sort of geographies and locales that we're willing to support. But at this very time, this is just simply reserved for US-based companies and US-based clients. And the second question, will the bank be able to support a crypto exchange for instance? Relatively difficult to answer that question, to be honest, because again, this is for anything that's really in relation to crypto, it's going to be, approval is going to be provided on an exception basis. And so we'd really have to receive a lot more information in regards to how the crypto exchange is working. Is there any underlying, is there any underlying, is the exchange, for example, holding on to the actual cryptocurrency, et cetera, et cetera. So, I can't necessarily give a definitive no, nor can I give a definitive yes. It actually have to go under review, and it would have to be approved by our C-suite here at Grasshopper Bank.
All right, thank you very much, Sydney. Okay, so there's also a question from Jubril. It's still for Sydney. He's asking, is there a chance that what happened to African companies a couple of months back, where their accounts were locked with no timely explanation, would ever happen with Grasshopper? That gives a lot of sleepless nights because we aren't sure if we could lose access to our funds. So it's basically concerns around blocked accounts. So that's basically the question.
Yeah, great question, Jabril. And I definitely can empathize with you. And I absolutely know that this is a very valid concern. And because again, the bank account is really it's the lifeline, and it's the livelihood for a lot of businesses. And so having the concern of accounts potentially being blocked or closed, I'm sure it really presents a lot of sleepless nights and potential worries there. But what I'll say here to answer your question, and I'm going to answer this in two parts, right? Really what occurred here with a lot of African companies being locked out is really what occurred with Mercury Bank, right? And with that fintech. And as I explained earlier, Mercury is not a bank, right? They are a fintech. Mercury was at the mercy of Evolve Bank. Right now, Evolve Bank is really the institution, I am sure, that told Mercury, look, we're unable to provide any sort of, or we're having difficulty providing the KYC, AML, and overall regulatory scrutiny regulatory oversight more so for these bank accounts. And I'm relatively sure that's what prompted Mercury to kick out a lot of these, African companies from the bank here. But again, that's not a decision that was just made by Mercury, I'm sure. It's because Mercury is a fintech and not a bank. The underlying bank, Evolve, is really, I'm assuming, and again, don't quote me on this, I have no guarantees, but just kind of based off of my knowledge of everything, Evolve Bank is probably the underlying institution that came to this decision to kick out these companies, which is why I kind of provided that overview of the landscape, because I think it's very, very important for individuals to do their research to determine if they're actually banking with a fintech or if they're banking with an actual bank, because this is one of the risks that you face when you actually bank with a fintech, right? Now, second, to answer your question here, will this happen with Grasshopper? Again, I don't have a crystal ball. I don't have a crystal ball into the future here. And it would be my worst nightmare, and it would be a pain if this happened to any African companies here that bank with Grasshopper, right? But I will say that's why I wanted to be very, very clear in regards to the type of businesses that we can bank, and the type of businesses that we can bank that are, first, just highly regulated or prohibited at all, the type of forms, the type of documentation that we need, etc. Because it is my goal to really ensure that from a compliance perspective down the line, there's not any sort of heightened scrutiny to any startups that are actually based on the continent to essentially bank here with Grasshopper, right? So that's why, I want to make it very, very clear in regards to what we need up front in order to proceed. And then secondly, that's why I also pointed out that it's very, very important for these companies to establish some sort of US operations, right? Because companies that have more exposure and that are actually conducting more of their business in the United States, not just, simply just using it as a deposit account, this is going to ensure that the accounts are remained open. So again, having maybe sales teams here in the US, having potentially, conducting payroll, paying individuals here, engineers, etc., right? Having, again, US-based operations will essentially decrease the likelihood that your business is going to face any heightened scrutiny or any heightened regulation as it pertains to banking here in the United States. But again, I can't make any explicit guarantees. Here at the bank, unfortunately, we are at the mercy, not unfortunately, fortunately, we're at the mercy of the regulators here in the United States. And again, this is a very highly regulated market where we must remain compliant to federal laws and regulations. And so because of that, if we're ever faced with the tough decision of closing bank accounts, I can tell you here, we would conduct it a little differently, and we would at least provide a notification to our companies, right? Hopefully a month, 2 months, etc., and potentially assist with finding new banking homes where you guys can essentially move your banking services to. So hopefully I answered your question.
All right, thank you, Sydney. Jubril, I hope the answer is clear. Sydney, just for your notice, just for your attention, Sydney, Jubril also asked 2 questions. The questions are in the chat box. We can also share that with you after this meeting, but I think the questions are personal, probably with respect to the transactions that he has carried out in the past. So you might want to address that probably privately after the session. By way of a recap, we've been talking about registrations, US entities, registering US entities, the different types of US entities you can register. We've also talked about the difference between Delaware entities and other registering companies in other states or entities in other states in the United States. So basically the idea is, for those that joined late, please feel free to send your questions to the chat box. I mean, I feel like webinars are opportunities for people to get free legal consultations sometimes, and free business consultations as well. So if you have questions, please drop it in the chat box. There's a question here as well from Doyin Abiola. She's asking, are there transfer limits on international transfers from a Grasshopper account?
Yeah, great question here. And really just to be clear here, I'm assuming, are there any limits as it pertains to like sending out international wires, right? Because really the reality is, and I'm sure this is how you guys are, utilizing the bank account here, right? You have US-based investors or US-based, revenue. The revenue comes into the Grasshopper account, right? And then essentially you guys have your own in-country accounts in Nigeria, Ghana, or wherever else on the continent, and you're looking to send an international wire to the in-country account that you currently have, right? And to answer that question here in regards to any sort of international transfer limits here, the answer is no, not to my knowledge, because, wires here just in general, you can send out wires up to like 100,000, 150K, etc. What I recommend though, for any potential, prospects that are looking to join Grasshopper when they're looking to conduct an international wire, I would say in regards to our overall product services and product capabilities, sending out international wires is still a manual prospect that needs to be conducted here at the bank. And so just really for ease of servicing here at Grasshopper, send an email over to me and our client service team, just maybe like a day before a wire is being sent or a couple of days being sent, just so we can ensure that, we're prepared to execute this wire. And in the instance that there's any sort of, restrictions or any sort of restrictions in regards to the amount, we can communicate that with you beforehand, just to ensure that your wire is executed appropriately as well. So that's typically what I recommend. But again, in regards to any sort of limits, if there is a limit, it's going to be very, very high, and we can just work with you just to ensure that there's no really hiccups as it pertains to sending things out.
Okay, thank you very much, Sydney. I hope that's clear to Doyin. someone asked the question, like it's also with respect to your conversation, the explanation you gave about place of operations for the US entities. He's asking, Sean Burrows is asking, so to confirm, his question is, if I have a US-based company operating in Nigeria, you couldn't service accounts. So it's basically asking, he's asking if you can still service accounts for US-based companies that operate in Nigeria. I guess that's for clarity.
Yes, and just to confirm to everyone, we should be able to, right? As long as the account isn't in any of the prohibited account types that I mentioned or the restricted account types that I mentioned. If you have a US Delaware C Corp, you have that, or just more so if you have a C Corp, if you have a certificate of incorporation, and if you also complete the W-8 beneficial ownership documentation as well, you complete the account opening application, et cetera, it may take a little longer to open the account because we have to conduct the KYC and the AML as part of the account opening process, but we should be able to open the bank account, especially if the purpose of the bank account is just simply to receive in funds from investors, right? Which for a lot of the TLP advisory clients that I've assisted so far, that is the main purpose. They just simply need an account to hold deposit funds in. And then from there, they typically send out foreign wires to their in-country accounts in Nigeria, Ghana, etc. But if that is the case, we should be able to open the account. Now, what I mentioned here in regards to actually having US operations is just to peer into the future, just to ensure that down the line, there's not any sort of compliance or regulation issues that we may run into. I definitely recommend setting up some US operations for your companies. So hopefully that provides the clarification.
Okay, thank you very much. I mean, based on your explanation, I'm just, there's personally, I see a gray area here. I think Oby can assist to clarify, because I know that when Oby was speaking, she mentioned that for entities that have few operations in the US, that have less operations in the US, the tax obligations are not so much. Oby, please correct me if I'm wrong. So I'm trying to see how companies can strike the balance, because it's like, if you don't have so much operations in the United States, you are not faced with many obligations as far as tax is concerned. But still, opening a bank account with few operations in the United States or less operations in the United States makes it difficult to set up a bank account. So I don't know, Oby, can you provide clarity? What do you mean here by operations? What does operations entail in this sense?
So for me, operations would mean, I think even Sydney mentioned that, like, have something. Say, for instance, for most startups, the backbone of your company is your tech, right? So say your devs, your designers, and all of that are in Nigeria. But Sydney had even given an example, like maybe sales. So simple thing as simple as just having, say, a virtual address and having, say, a sales manager, an account manager, one project manager, or something of the sort, and just giving payroll to one person or two people or what have you, would work as operations. Now, to touch on what you talked about, taxes, I don't think I talked about that here today, Titi. I think you're confusing stuff that we've worked on together at the firm with what I may have said here today or not. But as far as taxes go, it would still boil down to the same thing, because like I've said, most startups would have a corporation, right? And if you have a corporation, the corporation still would just owe money. Like the corporation itself would owe taxes on its own profits. So what's profit? Its profit is income minus operating expenses. So at the end of the day, it's still the same thing if you were reserving, whether you were moving all of your money to Nigeria or Ghana or any other African country, or you were reserving some here as operating expenses, it still goes away as money that has left your account, right? So it's just still, taxes would remain the same as whatever your profits would be for the company. Titi, I think Titi, you're muted.
Sorry about that. Thank you very much, Oby. One last question. I mean, are there certain entities you would recommend for startups in certain industries more than others? For instance, if you are advising a startup in the health tech sector and a startup in the fintech sector, would there be a difference between the entities you would recommend to startups in those industries?
No, recommendation would not be based on your industry, but more of, say, your purpose, for instance. So, say you were trying to be a funder versus being a founder, so if you were the one who was giving out the funds, I most likely would not be encouraging you to have a corporation, for instance, as opposed to if you were a startup who was looking to receive funds from VCs, then I would definitely be saying you want to look at startups. Even if you were even a startup in whatever sector, and you went and you had, say, a rich mom who was ready to give you $1 million, for instance, and you weren't really looking to VCs, I most likely would be checking to see what your tax situation is, to see if an LLC may be right for you as opposed to a corporation. So it's just about your situation and what you were going to do with the company as opposed to what sector you are in.
All right, thank you very much, Oby. There are questions in the chat box here. I'll start with the one that I believe applies to Sydney. So the question is from Damola Bamboye. He's asking, can digital wallet technology be built into your business as a service stack? For clarity, can digital wallet technology be connected into your business as a service stack such that payments can be received into the wallet and paid out to product users?
Great question, Damola. I'd have to, the short answer is potentially. We'd have to actually talk offline. I'd have to see like the flow of funds and just have some additional information in regards to, how the digital wallets were integrated. But again, here, I will say from a banking as a service perspective, it's a very highly selective process here at the bank in regards to the sort of businesses that we're currently onboarding here on our banking as a service stack. And so we typically just review opportunities on an individual basis. And so if anybody had any questions, or they were looking to launch, they had a US based company that they were looking to launch or looking to integrate a banking as a service stack on, you can reach out to me separately, and I'm more than happy to discuss this offline. But with that question, I just really have to say it depends, and I just need a lot more additional information in order to advise you correctly.
Okay, thank you. I think Damola has also mentioned that he will reach out to you via LinkedIn. So yeah. Another question here for Sydney is, does Grasshopper Bank have APIs for creating bank accounts for individuals and SMEs?
Short answer is yes. That is an ability that we have within our banking as a service solution. So, and within that solution, we do have so basically banking accounts for individuals, that's a consumer focus, right? So we do have BaaS capabilities where accounts can be opened via API for consumers as well within that BaaS stack.
Thank you. Also another question, what is the minimum level of operations that suffices for US-based operations? I think this goes to Sydney as well. I believe this question is with respect to operations relating to bank accounts or something. Or Sydney, can you take that, please? Yes. Yeah. Okay, so but Damola has confirmed that it's about bank accounts.
Yeah. So just to confirm my understanding of the question here, the minimum level of operations just to open like a US bank account, correct? Do I have that correct, Damola? Correct. It's, again, this is like, it depends. It depends on the details, right? We have to kind of explore this on a case by case basis in regards to like what that minimal level is. But, typically, as long as you have, that certificate of incorporation, we have the WABN form, etc. we can typically just, we really just review this on a case-by-case basis. And so it just really depends on the business, the industry, et cetera. It's hard to kind of give minimum level requirements for US-based operations, because that's really gonna vary and depend per business. I don't know, Obi, I don't know if there's any additional color that you can shine there from like a legal expertise and a legal definition perspective, but at least from the bank side, it's really gonna depend for us.
So, same as what Sydney said, there's no hard and fast rule, and there's no, as far as I know, there's no, because God forbid a lawyer should know the law, but as far as I know, there is no law in specifically that says to anyone how much operations is actually operations or anything of the sort. It's still about looking at the entire picture and wondering what this company is all about. So I think I sort of answered this question earlier when I gave examples, and I said little things like having an address, a business address in the US, or having 1 or 2 employees who are here would suffice, in my opinion, or maybe only even just having an address to start. It's really would depend on who was reviewing if the time came. So there's no law that we can use as a backing for this. So it's hard to give a clear answer to say this is exactly what it is. It's not black and white.
Hi, Oby. Sorry to drop in, and thank you for everyone here. But Oby, I thought maybe it would be good to also make a distinction between registered address and virtual address with regards to operation. Yeah.
Yes. Okay. So we get this a lot, and it's actually a good thing to clarify, because since a lot of you people on this call are clients, when we say that you need a registered agent for Delaware, it's actually an address for service, say, for the Delaware Secretary of State. So it's just a legal requirement that the state requires you to have an address for service of someone who is appointed as the agent within the state. If you lived in Delaware, for instance, you could appoint yourself as your own agent, right? But for the average setup, you don't live in Delaware. You don't have an address in Delaware. You don't have a cousin in Delaware who's willing to do this for you. So what you want to do is you want to use a professional service. And even if you had a cousin, you don't know that this cousin is going to be willing to receive this important mail from the government for you and do what they need to do with it. So you need to appoint someone, and that's where what that means. And this fee is usually added to what we would list as what your fees are when you incorporate, because you just have to have it. It's different from a virtual address, because the virtual address is where you would receive your mail. There are different ones who offer different services. Some of them are just like mail and scan, which is what you would need because you're outside the country. So it's cumbersome and expensive for them to have to mail it to you outside of the country. But you would want to, set up a different service, which is sort of like a mail and scan. Damola is saying it's a registered address. Damola, care to shed light on what you mean by, I'm not sure what you're referring to as the registered address. Okay, I'm not sure what Damola is referring to, but yes, your address is what you would deem as your address that you can receive. Your mailing address where you can receive mail at is totally different from what your registered agent address is. I don't know, I hope that clarifies any issues you may have had.
Yeah,
I think okay.
To just add more color, we see that sometimes people use the registered agent address as their address in the US. It's not the same. We see it on websites as well. It shouldn't be on your website. It's not your business address. So it's important to have a business address separate from that registered agent address. And you can get a business address either by getting an office or getting a virtual address, business address.
All right, thank you, Odon. I think Damola is also clear. She says it clarifies it. Yeah, thank you very much. So I think we've come to the end of this session. You'll definitely agree with me that it was an insightful session, and we definitely learned a lot from Sydney and Oby. Thank you very much to our speakers. We appreciate your service here today. If you have the participants on the call on this Zoom call, please feel free to reach out to us, TLP Advisory, if you have further questions and if you need clarifications around setting up a US entity, choosing which type of entity to set up. We also provide services around that area. Also, if you want to reach out to Sydney, you can also let us know and we will connect you to Sydney if you need services around opening a bank account in the United States, anything around banking operations in the US. Sydney is definitely going to be available to provide those services. So thank you very much to everyone. It was a pleasure doing this. Thank you. Have a nice day.
Thank you, Titi.